Hello and welcome back. If this is your first time here, I am Dr. Stock, Doctor of Education, and in this video we're talking inflation, CPI coming out tomorrow 8:30. So make sure that you pay attention to the details in this video because I also want to give a forward-looking projection for CPI, not just for what we have for July, but also August, September, October. That's what I have for you in this video. We'll also mention PPI. We'll talk about what's going on with the markets. And I do want to know, what do you call a fish without an eye? A fish. All right, so we want to know about inflation. Are we going to continue to stay on trend? What is the Fed going to do if we do stay on trend? If we come off trend, what in the world is going to go on with the markets? And I also, like I said, want to give that forward-looking mention about CPI itself in this video. So I will be using the Moomoo app, and later on I will tell you how to get up to 16 free stocks using my link that's down in the description. And for right now, I just want to say, if you like my commentary and would like to hear more of it, there's also a link for the Patreon down in the description with my Patreon exclusive content, my watch list of stocks. I got my CPI workup over there. Also my NVIDIA earnings projection, which is coming up on August the 23rd, that is also available through the Patreon. You can also talk with me and my Discord community members by using that link down in the description. That's enough of that. I do want to jump over to trading economics. There we are, Thursday, August the 10th, 8:30 a.m. So that's tomorrow from today, because I'm recording this video today. Core inflation rate month over month. So we want to look at that. They're expecting, well, 0.2% is what we got previously. Consensus and forecast are both 0.2%. Honestly, and it depends on what we have. If energy comes in red hot for us, and I know that it's attempted to be excluded from core, that it's less food and energy, but it still has some impact on the inflation rate anyway. From my projections, it still looks as though we can still come in at about a 0.1, which either one of those things would be on trend. And one of the things that makes me think that is that through my research, that July is typically lower than what we have for June. And so as a matter of fact, since 2009, there's only been one time that July has been higher than June, and that happened back in 2020. And we know what happened in June of 2020, following by July of 2020 with the pandemic, so I'm not going to go into that. I will stick with the inflation rates that we have here. So I also expect the core inflation rate, which if you look at the forecast that they have for that, let me zoom in again here. So for core inflation rate, they're expecting 4.8%, which is what we had previously, and they're expecting it to stay even by consensus and by trading economics forecast. I actually have that in as 4.6 or 4.7. So I know that's a lot of numbers to throw at you, but all I got to say is I think that July is going to look really good for us for inflation. So I think the markets are really going to like this, and I'll show Moomoo in a little bit, and we'll take a look at the Qs, we'll take a look at the SPY, and talk about what I'm seeing on the charts there and what I anticipate to happen, not only in the near term, but also over the next several months. So we're going to have to watch that happen. I do think there's a fair amount of it tied to what we're going to see with inflation numbers. And I did say that I would talk about the CPI and PPI. So here's what we got. So you can see leading up to, we got a fairly straight line, very steady inflation, and just expect inflation to be part of life. The prices will always continue to rise, and you can see here where we had that recessionary time and we actually had some deflation where the prices went back down. That is just evidence that deflation can be, at least a lot of it in the near term, usually is signs of economic distress. So inflation is actually where we get a little bit of that health anyway, at least slow and steady. But look at that inflection that we took for following the pandemic, I should say, with supply chain issues. And then we also had lots of inflation itself that came from the money printing, so devaluing the monetary supply that we had. And then you can see just recently, let me change the time frame here just a little bit so you can see the end of this, that we just started to kind of roll over that hill, and the fact that we have this shape going, this is known as concave down. That is something that tells us that we have a decreasing rate. I'll move on from there and just talk about the different impacts that we have. Take a look at the producer prices going back to June from 2022. Yeah, there was a little bit of up following it, but man, they mostly went flat compared to what we had for CPI. And this is looking at final demand, of course. This is not less food, energy, and trade services. So a little bit of difference, but even so, when we do look at that one, it doesn't look much different than what we have. And also, just in real quick in terms of PPI, in June of 2022, we had 0.9, and since then, negative 0.3, 0, 0.3, 0.4, and then it just seems to kind of trail off from there. We see the same thing when we take out food, energy, and trade. And then when we move on from there, like everything that we see is the trend downward, and that trend is continuing, and I don't see that trend for producer prices changing anytime soon. And just a quick look at the CME Fed Watch tool, we still, for September, have the most, an overwhelming probability that we're going to have no rate hike, and that's not really all that big news. I do want to say that the probability of a rate hike going back 1 month to July the 7th is 24%, and then dropped to 18 up to 1 week ago, dropped to 14 up to yesterday, and as of today is at 13.5. So we see that likelihood of a rate hike in September coming down, which means that we have the increase in maintaining the current rate that we have. And then also the Fed has mentioned that they are at restrictive levels. They didn't say that they're approaching restrictive levels. They said that they're at it. So if we should start to see some softening in the labor market, that would be further evidence that the Fed has done rate hiking. I swear that they want to see that. And I also think that they want the markets to pull back from where they're at right now. So about the forward look for inflation, based on the research that I've done and talking about the year-over-year numbers on a core basis for CPI, August, September, October are typically where you find the minor high peaks, if you will. The highest peaks are February and March. So being that August, September, October are where we find those peaks, that means that July is typically, well, it doesn't mean that, but July is typically a low point for us. So this is going to be probably the best of what we're going to see, even though we are trending downward. It's not a strong enough trend downward to overcome the fact that somewhere between August and October is where we find that next minor peak in inflation on a seasonally unadjusted basis. So what that could mean for us and that could mean for markets is that we could possibly have a little bit more of a rally going through August into September. And then when we get August numbers, and also we have the meeting in September from the Fed, like we don't know where those hot numbers are going to land. Sometimes August is still a little bit cooled off. Sometimes August runs hot. And then September is where you see that peak. Or sometimes September is a little bit cool, but you're like every month that goes by that you don't see that high read across those 3 months makes it more likely that next one is going to be that next high read that we get. So August, September, October, expect a peak to be in there somewhere. Expect an inflationary scare to come out like, oh my gosh, a resurgence of inflation. Expect headline numbers to not be incredible during that point in time, that we start to get a month or two that looks like we've stagnated. But the saving grace there is November, December is where we start to see the lowest values for inflation on a seasonally adjusted basis. And then by January, we should solidly on a core basis be down in the 3% range. So here we're looking at the SPY, and from what I see here, it looks a little bit like a jaggedy, thanks to the volatility that we had, but a jaggedy sort of cup and handle that we have going on. So let me bring up a horizontal line. So right there is about where we see it. As a matter of fact, I can even adjust that up a little bit. There we go. So breaking above that line, if we are able to break resistance, I think that would allow us to retest this peak that we were at. And, you know, it is possible that we finish August strong and that we start September, and that's really where that weakness comes in. And that's something that we want to watch out for. So also, I think, let me go back to a line segment here. There we go. Coming off this little handle that we have here, I think it is possible that from there that we start to come back up this way. There we go. And then that we start to retest this previous peak that we had here. And then from there, if we do retest that, if it does play out that way, I think that that's where we could start to get that next drop and a little bit of softness where we start to see a little bit more of a market correction. So I don't know that it plays out that way. If we start to come back upward off of this throughout the end of the trading week, if it ends strong green, if we come back up towards this resistance, it really could cause a little bit of that to happen. If we do break through that trend line and go back towards the peak, there's going to be a little bit of euphoria that comes with it. And then I think, like I said, going back to where we had it looks like 468.76 is where we peaked out on this thing. I think that we could possibly even push up a little bit beyond that and make people go, wee, and then, you know, have a little bit more of a sell-off from there from what we had previously. So I don't know if that plays out that way, but if the inflation numbers get a little bit scary, August, September, October, the way that I think that they could, that is something that we possibly see. So we're going to have to watch and see if that does happen. And it's certainly if the Fed comes out and surprises us and does a rate hike, the market at this point is not pricing that in. So if that narrative changes, that they do start to talk about a rate hike, we could possibly see that. All right, on to the Qs. Very similar chart here. Once again, we could see a little bit of possibly a cup and handle playing out here as well. That's And all of this, like, I'll zoom in more so we can see where we're at. I said that we could possibly retest this 50-day, and that's pretty much what we did yesterday in the market. And we tried out the 50-day, we bounced off it and came back up and settled right here at about 300. It looks like 372 is where we settled for the cues that we're looking at. So 50-day holds, we bounce back up off of it and then break this resistance level that we have here right around 387-ish is probably, that could open up the path for that 400 to come in, especially if the inflation numbers are favorable. Don't forget about Michigan consumer sentiment, by the way, which also comes out on Friday, the same day that the PPI does, just I believe at 10 a.m. If I went and looked at the calendar, I think it's 10 a.m. Friday that we get that Michigan consumer sentiment survey. And if that's also favorable, if inflation, long-term inflation starts to come down, if we have a positive looking outlook, if it continues to trend upward, those could be good things for us coming out of consumer sentiment. We do have things to pay attention to, such as the bank downgrades, the U.S. credit downgrade as well. So just other things to keep in mind for consideration. So if we do rally back up from here, I think we can get the cup and handle play out. If we do continue to correct, I think that's also something that we can just expect to see happen in the near term. And after a lot of up, as I've said in my other videos, that's something that can most definitely happen. So about those free stocks, if you want to get them using my link down in the description, you get up to 16 free stocks. And by doing deposits of $100 or more is where those free stocks come in. You get a $50 cash reward at each tier, 5 free stocks for $100. $1,000 or $5,000 deposit gets you 15 free stocks. That $5,000 deposit, they made a change here. It's a free share of Tesla, or not EXPE, but Google is the other one that we have now, GOOG. So check out those free stocks by using my link down in the description. It is a wonderful opportunity. And also in terms of opportunities and providing further value and service to the people here on YouTube, I also have that link for the Patreon down in the description where you get access to my exclusive content. And like I said, my CPI stuff is over there. And also my Tesla earnings projection is over there. My NVIDIA stock price prediction, my NVIDIA earnings projection, earnings forecast is also available, which those earnings are coming up. I'm pretty excited about it. And market sentiment has a huge impact. I mentioned that in my video that I did over at the Patreon as well about how market sentiment can affect that price because it affects the trading multiples that we have. And so that's something, as we get near to that, I'll discuss sentiment and I'll do a reissuance on Patreon and also bring some of that information over here to YouTube to share with you guys as well. So to wrap up about CPI, 0.1 to 0.2% month over month. I'm really gunning for that 0.1% month over month. Energy could make that a bust, but still, I'm sticking with it, 0.1% month over month. And then I think for the year over year number on a core basis that we see 4.6 to 4.7. And so that's well, both of those are on a core basis, but the year over year 4.6 to 4.7, I think the market's going to find it favorable. So we'll see if the market expects it to be favorable, we could possibly see green in the markets today, a strong green day coming out of it and then selling off tomorrow. If we sell off today, then I think that we could have that spike tomorrow, given that inflation comes in favorably. So there are a lot of variables, a lot of shifting around. I think that it will be upward pressure one way or another on the markets, whether it's through expectation or through actual values. July's CPI should be favorable to the markets. PPI I expect also to be favorable to the markets. So thank you guys for watching this video. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.